Mahantesh, hi, afternoon. It doesn't seem like there's going to be any stalling of the fall within banks. Concerns galore around moratorium and the further NPA pressure coming in, and that's really keeping the stocks as well as bay, I guess. At bay, I guess.
Yeah, I think you're right in your assessment. Moratorium is something which is on the back of every investor's mind. Banking sector would be affected by the outcome of what really happens once the moratorium is lifted, because the NPA problems are something which will come in. But having said that, I must point out that the banking sector has a lot of support coming in from the RBI in terms of forbearance. The banking sector has raised a lot of capital, huge amounts of capital raising activity has been seen with the likes of an ICICI bank to HDFC bank, just to name a few. And we also see that between the credit growth and the deposit growth has been quite strong. So from a franchise perspective, banking franchise is doing actually wonderfully well. So while the fall today seems to be of a temporary nature, we believe that soon the banks will be able to do better when it comes to their financial performance.
Okay. Mahantesh, should we discuss pharma? I don't think we've touched upon it, and it seems to be the only thing we're talking about today, but an across-the-board move coming in once again.
So I think pharma, as you're aware, has been doing quite well for the past few months. The upgrade in the pharma sector from the market is a recognition of the fact that the US FDA pressure is now abated a bit. And the pricing pressure that was seen in the US market has also, in a way, abated. You would have seen that most of the pharma companies over the years have also managed to reduce their debt levels. So all in all, the pharma sector was re-rating. I think that re-rating process is an ongoing process. Even today, most of the pharma companies are up. I expect that re-rating process will continue for a few more months, and we will see most of the pharma companies really doing better as we go forward. The first 1Q results of many of the pharma companies you would have noticed has been quite good, robust, and that's thanks to the sales that they've been able to do in the US markets. That said, today's move perhaps is being led by what we saw in terms of the news development with Dr. Reddy's.
Brought about almost a re-rating of sorts for the entire sector. Besides that, I'm just looking at the way some of the IT stocks as well as have performed, and just this week itself, the kind of market cap addition that you've seen in not just the blue chip names, but even the smaller boys. So starting out from an IT, from a TCS, an Infosys, HCL Technologies, you've got L&T Infotech, Emphasis, Tech Mahindra, InfoEdge, Mindtree, Coforge. They all have scaled up fresh highs for themselves.
Mahantesh, anything else you'd like to leave us with today?
The view that we have been articulating thus far is that we will see markets reaching to higher levels simply because you have huge amount of liquidity still in place. The Fed commentary that was there a couple of days ago was in a way in line with this liquidity theme. Liquidity theme being there, as the lockdown gets gradually lifted, we are seeing economic activity bounce back quite sharply. So when you have economic activity bounce back meeting liquidity rush, markets are bound to go higher for the time being. The discounting in terms of what multiple should be offered in such a situation will be taken care of probably next year and not really now, because one will be able to then find out which are those set of companies who are delivering values, which are those set of companies which are not able to deliver value. So right now it's purely momentum paid, liquidity rush meeting the economic recovery bounce back is what is causing the markets go higher. We think it will still go higher in the days to come.
All right, Mahantesh, have a good weekend. We leave it there.